This is the frontier of the South African coal industry, the domain of small junior coal miners who risk millions to carve coal from a field far from anywhere. This mine near Delmas in South Africa's Mpumalanga coalfields represents 550 million rands worth of investment into an open cast mine and washing plant.
So here it is, 170 million rands worth of equipment. It crushed its first coal this month, and very soon it'll be crushing and washing 30,000 tons of 5-seam coal that is high quality metallurgical coal.
This company is fortunate in that it raised the money just before the credit crunch. Otherwise, this mine would still be a farm. CEO Paul Miller, a banker turned miner, knows how tough raising capital for coal is.
There's a lot less of the good quality coal. South Africa, some of the majors seem reluctant to invest money relative to other projects they have around the world. It's a logistics constraint, and the projects just aren't there anymore. The Witbank and Highveld coalfields are mature coalfields. There aren't 100, 200 million ton projects there out there for the picking.
Hundreds of junior miners like this are leading the way in South African coal mining through the controversial use it or lose it changes 6 years ago in the MPRDA mining laws. At the time, there was an outcry from those who saw it as being stripped of their rights.
We're a child of the MPRDA. People forget, they get very focused on the BEE aspects or the transformation aspects of the MPRDA, the new act. But in actual fact, there's also a very key other underlying principle, and that's the use it or lose it principle. The very prospecting rights or mineral rights that we're on at the moment were previously held dormant by a major company that neither had the appetite or the interest in developing it. We've got 600 jobs that we will create on this project because we were able to access those mining rights.
There are fears that these junior miners are too small and too scattered to feed demand as costs rise and coal quality declines. On top of this, the Witbank, Highveld and Ermelo coalfields are running out after generations of mining. The new Waterberg coalfield in the northwest of the country is developing slowly. Only Exxaro has ventured in so far. South African production stands at around 250 million tonnes a year, almost 5% of world production. A recent survey by geologist Chris Hartnady forecasts a peak of 284 million tonnes by 2020, falling to 250 million tonnes by 2037 and down to 125 million tonnes by 2063. If predictions are right, that's a drop of 50%.
Yes, there could be coal fields that will be depleted over a period of time, but we will find that there will be replacements. As an example, you've got the Witbank coalfields, the Highveld coalfields, and the Ermelo coalfields. The Witbank and the Highveld coalfields they are seen as the traditional coalfields where activity has taken place over a period of time. There is a move now towards the Waterberg as an example. So our coal production in this country, we will still have coal for the coming 40 to 50 years.
Mike Teke is the CEO of black empowerment coal exporter Optimum.
The coal mining industry has made significant progress in terms of black economic empowerment. And I see that if you look at companies like Exxaro, if you look at ourselves, that is Optimum Coal, there is a significant increase in the number of players, especially in the coal mining space, specifically. I see that one being accelerated. I see progress in terms of the shareholding.
Optimum is optimistic about South Africa's coal exports, but sees a big problem too.
We need to address our rail infrastructure, which I'm positive TFR, Transnet Freight Rail, have come to the party, the spending capital. Number two, if you look at RBCT itself, Richards Bay Coal Terminal, it's gone beyond, it's now at 91 million tons of export capacity. And Transnet is working towards going to 81 million tons in 2014. And that is the Maputo corridor everybody is energetic about, if you look at the Durban port as well. Therefore, we are geared to deliver in terms of the export markets.
This is South Africa's Mr. Coal, Xavier Privot. He is the government's former chief minerals economist and has spent more than 20 years studying the coal industry. Just to start off with, what is the calculation of the coal reserves that we have here in South Africa?
My figure for 2010 would be about 33, 37 billion tons. That is my unofficial figure, but it's the only figure there is. Now I know that the Council for Geosciences and ESCOM are busy trying to estimate the actual reserves of the country, using all the mining companies and all the records that are available to the Council.
How likely is it that the coal industry here in South Africa can keep up with export and domestic demand?
I think that's not a problem. We have enough development at the moment. The projects that are being initiated and the projects that will be coming soon, they will have enough coal for I would say the next 40 to 50 years. I think we have enough coal in the ground that could be developed into reserves and into mines. The problem we have is, as you mentioned before, that we have a delay between the time when you start your operations, between the time when you apply for licenses and so on, about the time when you give you those licenses and allow you to start the mine.
Well, how likely is it that South Africa will be able to fund and build the infrastructure that's needed?
The CEO of Transnet was Chris Wells, and he still is, but I think he is stepping down in March next year. Chris' idea is, I think, an excellent idea, because he says Transnet doesn't have enough sources, enough capitals, but what we can do is we could do a partnership with the industry. So if, let us say, a mine needs so much rail, the mine or the owner of the mine will buy a certain amount of rolling stock. That rolling stock belongs to the mine now, not to Transnet, but Transnet will operate the line and Transnet will move that rolling stock to the port.
Just talk to us a little bit more about mining licenses. There are many mining licenses that have been issued, but we understand that not all of them are being used.
Well, the procedure to do licensing is quite clear. The law says you apply for a license, then you follow a certain path until you get to when you need to apply for a mining license, which is the final step before you start your mine. What I think is needed from the DMR, I suppose, because they are the owners of all that information, is to see if there's people that have applied for this license are really serious about it, and if they're not, those licenses should be released and put back into the pool so that other people can apply for them.
What will be the effect if this problem is ironed out?
Well, the effect will be that some of the reserves that are being blocked now by these small applicants of prospecting licenses will be reactivated. We have reserves in the ground that are not able to be accessed and studied simply because there are so many applicants that the reserves are being fragmented tremendously.
How can that ever happen if everyone's doing their own thing all over the place?
Well, I think some sort of entity should be formed that looks at this situation, and then it sort of tries to establish communication between the licensees and say, well, look, this is the way to operate. This is how a mine is put together.
What about the export market? Where is the demand coming from around the world?
It's actually quite, it's a swinging market, okay? If the prices are relatively low, like they were for a few months ago, then the Indians and China, they want our coal badly. They actually want to increase exports from South Africa a lot. The problem is the moment the coal price increases, like now, about $100 a ton, then suddenly that market sort of disappears or dwindles to almost nothing, and then the European market is our main.
Investors may find it easier to put in money into coal from February, when the South African government completes a speed-up and simplification of its mining rights.